this is the first major market pullback in history where Bitcoin has outperformed the equity index. If you go back to 2022, during that market pullback, Bitcoin was 3x on the downside of equities. If you go back to 2018, Bitcoin was a multiple of the pullback we saw in the S&P 500. This time it's basically keeping pace depending on when you measure the start and stop of this pullback. It may be outperforming. That tells me that there's a sustained fundamental bid for Bitcoin. And if we can get some normalization in these markets, I know that's a big if, we'll dig into when that might happen, but if we can get some normalization in these markets, I think that persistent bid is going to drive it back up to new all-time highs at 109. And then above that, and the next place I think it stops is 200K. I think we're going to get there by the end of the year.
Matt Hougan lays down a bold but reasoned claim. Bitcoin is headed to $200,000 by the end of this year. That's not just a headline grabber. It's a thesis built on demand-supply imbalances in the crypto space. According to Hougan, Bitcoin is being vacuumed up by three major forces: institutional investors, corporate treasuries, and increasingly, even sovereign governments. These are not retail buyers looking for a quick flip. These are long-horizon, strategic players who tend to hold, not trade, assets. That creates a persistent structural bid for Bitcoin, and the available supply can't keep up.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
That $2 entry point would have looked pretty good at the end of the year. I think Bitcoin's going up to $200,000 this year. So you would have been sitting pretty. The reason for that, I mean, the fundamental reason for that is I think there's a demand supply mismatch in Bitcoin. Bitcoin is growing up as an institutional asset. It's being vacuumed up by institutional investors, by corporations, and also by governments. There's just not that much Bitcoin to go around. But where I see this prediction looking real in the market, the way I can explain it to you, is this is the first major market pullback in history where Bitcoin has outperformed the equity index. If you go back to 2022, during that market pullback, Bitcoin was 3x on the downside of equities. If you go back to 2018, Bitcoin was a multiple of the pullback we saw in the S&P 500. This time it's basically keeping pace depending on when you measure the start and stop of this pullback. It may be outperforming. That tells me that there's a sustained fundamental bid for Bitcoin. And if we can get some normalization in these markets, I know that's a big if, we'll dig into when that might happen, but if we can get some normalization in these markets, I think that persistent bid is going to drive it back up to new all-time highs at 109. And then above that, and the next place I think it stops is 200K. I think we're going to get there by the end of the year. There are scenarios where the world enters a really challenging, sustained economic downturn and risk assets are downward weighted. There's a scenario where Jerome Powell actually drives us into a wall and doesn't play chicken and support the economy that would make that difficult. So, I wouldn't make the prediction if I didn't think it was north of 50, but it's definitely not 100. There's nothing certain under the sun. I will say I'm very confident that you're going to see a decoupling between Bitcoin and stocks over the next year. I think Bitcoin will strongly outperform the S&P 500 as it has in most years in its history. There's just a persistent secular bull market in Bitcoin, and I don't think there's anything about tariffs that's going to stop that. So north of 50, shy of 100. Depends on what you want to do with your portfolio. When you add gold to a portfolio, what you do is you keep the same return, but you lower your risk. When you add Bitcoin to your portfolio, you keep the same level of volatility, but you increase your returns. There's sort of two sides of the spectrum. When I think about it as a hedge, you know the old saying about gold, an ounce of gold has bought a good man's suit for the last 1,000 years, and it'll probably buy a good man's suit for the next 1,000 years. It holds its value versus physical goods. The problem with using that as a hedge in a portfolio, and I love gold, is if you put 5% gold into your portfolio, you've hedged 5% of your portfolio. What about the other 95%? The beauty of Bitcoin, because it's emerging as a store of value asset, the same way gold did for what it's worth in the 1970s when we got off the gold standard and you saw it went from $35 to $800. Bitcoin is in that same emergent phenomenon. is you could add 2, 3, 4% Bitcoin to your portfolio and hedge the entire thing against the fiat debasement, excess debt, and loss of institutional trust that we're seeing in the market. So it's just a very efficient tool long term. Short term, less so. Long term, it's held up extraordinarily well over any multi-year period you look at. Oh, that would propel prices up significantly and fast, and here's why. The US already created a strategic Bitcoin reserve. It holds the Bitcoin that the government has held for about 10 years, that it seized in the very early days of Bitcoin, holds 200,000 Bitcoin. But the White House executive order on that said that the Treasury shall find ways to add Bitcoin to its portfolio. If the US government starts aggressively buying Bitcoin, what do you think other governments around the world are going to do? I think there will be a cascade of purchases by dozens of countries around the world rushing to build their position in gold for the digital age, and that would drive prices perhaps above my target significantly. So I would note, it sounds crazy, but the US government owns a whole lot of gold. If you look at the store value market, the hard currency market, Bitcoin is $2 trillion, gold is $20 trillion. If you're 100% gold, 0% Bitcoin, you're not holding the market portfolio, right? You need to be at least 10% Bitcoin just to match what the global market is saying the store of value market is. So I don't think it's far-fetched at all for the US and again, dozens of other countries around the world to start acquiring Bitcoin. It is gold for the digital age. We're moving into a digital world. I think it's going to happen, and it'll contribute to pushing prices higher.
For investors wondering when to act, Hougan offers a simple but powerful signal. Watch how Bitcoin performs during volatility. If it can continue to outperform equities during downturns, and especially if it holds above the previous all-time high of $72,000, then it's sending a crystal clear message to the market. That strength would indicate Bitcoin is not just surviving the current cycle, but thriving.
I think it would probably be public. I think they would be public about it, or you could trace the wallets, or you would see some activity. There may even be a piece of legislation that passes through Congress that requires the government to do this. There is a piece of legislation at Congress that would have them acquire, 1 million Bitcoin over a period of a number of years. So I think you'll be able to see it. I think you'll be able to know. But what I would really watch is, can it keep outperforming equities as equities fall? If we see continued volatility, but Bitcoin holds above its previous all-time high at 72,000, it's just an extraordinary show of strength. And it tells you clearly, in my mind, that once the broader market stabilizes, this thing is back up to all-time highs and beyond. Look, I think we're entering a fundamental era of crypto. It used to be true that crypto had a broad market beta. If Bitcoin rose, then a few months later, Ethereum would go up, and then a few months later, other altcoins would go up, and you just sort of move out the risk spectrum, and you'd see all tides rise. I think that was from a time when crypto was primarily speculative. I think we're moving into an era where crypto is primarily fundamentally driven. Bitcoin is being driven by the fundamentals of institutions, corporations, and governments acquiring it. What will happen to the other 100 altcoins depends on what we see from the fundamental activity in that space. Will Ethereum do well? It depends on how fast stablecoins and real-world assets grow. Will Solana do well? It depends on how that competes with Ethereum. I think you're going to see a wide dispersion of returns amongst those top 100 assets. I would even bet that 70 of them will trend towards zero, and maybe 20 of them will do okay. And then there'll be a handful that return multiples of where they are today. That's the market that I expect to see over the next couple of years.
So what I did is I went onto TradingView and I built a little thing myself, and my own results surprised me a lot. Okay, so this is what I built last night while I was watching the NBA playoffs. Let me walk you guys through it. So what you're looking at up top is the Bitcoin price, okay? So this is just BTC USD. We're currently at $87,000, okay? Makes sense? Now, what you're looking at below is Bitcoin's correlation to the QQQ. Now, this is where it gets very interesting. Let me set some definitions for you. This number down below, its correlation to the stock market, ranges between 1 and -1, okay? 1 means very strong correlation. Wherever the stock market goes, Bitcoin goes, or vice versa. -1 means inversely correlated, where if one were to go up, the other would go down. If one were to go down, the other would go up, okay? 1, extremely correlated, they follow each other. -1, inversely correlated, they run away from each other. 0 means no correlation. When I pulled this up, I surprised myself because yes, Bitcoin at times is very correlated to the QQQ. However, at other times, Bitcoin has no correlation to the QQQ. And this seems to be a pattern. Okay? Bitcoin rests and sits at just about as correlated as it can get to the stock market, and then it decorrelates and separates itself pretty dramatically and then returns. Pretty dramatically and then returns, right? Are you guys able to see this blue line? Now, what does this tell me? What this tells me is Bitcoin, like the stock market, has just gone up. It's been one of the better expressions. In my opinion, Bitcoin's the best expression of currency debasement. The more money they print, the better Bitcoin performs. That's why it's been the best performing asset in human history, especially during this currency debasement period, because you can't make any more of it. It's the scarcest thing. It means it's the best performing thing.
Hougan paints a picture of a maturing crypto market. Gone are the days of purely speculative runs where altcoins blindly followed Bitcoin. We're entering a phase of fundamentally driven dispersion. Bitcoin is being accumulated for real reasons: macro hedging, monetary policy defense, and store of value purposes. Ethereum's future will depend on the success of real-world assets and stablecoin infrastructure. Solana will rise or fall based on its ability to compete with Ethereum. And most altcoins, Hougan predicts the vast majority, perhaps 70 out of the top 100, will trend towards zero. Maybe 20 will tread water. But a few, those with real use cases and traction, could explode upward. That's the selective merit-based market he sees developing over the next several years. Please like and subscribe.